We've been in Europe since 2009. The team has been very stable through that period. It's very experienced, long tenured. We've worked together in the trenches for a long period of time. When you think about Europe, it's the world's second biggest economy. It's got 500 million people. It is a very meaningful collection of countries. There is limited growth, but with that, there are pockets of growth that if you can find them, it's very advantageous from an investment perspective.
The other thing about Europe is that it's highly inefficient in terms of its banking market, and its fragmentation doesn't allow for the same mobility of capital that you see in the US. We find that we see opportunities that are more attractive or very attractive on a risk-adjusted basis because that problem doesn't have access to the same efficient capital markets that you might find in a place like the US.
Our strategy in Europe is twofold. We have a bottoms-up value-add real estate perspective. We're trying to find underperforming assets, fix that underperformance with our capital and with our expertise alongside our operating partners. And the second part of that strategy really centers around our ability to restructure capital opportunities in the market. So we're either buying through the debt or we are talking to a bank and we're able to either access real estate in a direct way or via any part of the capital structure.
We found that model of working with operating partners is really well suited to Europe because of how fragmented Europe is. There are 27 countries, different languages, different investment brokers, different ways of calculating income. And by working with a large set of operating partners, we're able to access and take advantage of that fragmentation. I do expect that 2025 will be busier for us than 2024. And that's really just a function of that distress that's been waiting finally capitulating. Transaction volumes and liquidity is down significantly in Europe over the last few years. And that combined with urgency to sell by folks that paid top of the market prices, perhaps borrowed heavily against it, is creating a really interesting opportunity.
I think you are going to see opportunities where maybe that return of liquidity is going to enable someone to actually do something. And the banks are likely going to force that outcome. So our expectation is we'll see more opportunities to invest in 2025.